His clients include pharmaceutical companies, private equity investors, blockchain companies, telecommunications, and he has played a key role in the development of Puerto Rico as an investment destination for the industry. So I think this is really important because we've got some really cool tax incentives in Puerto Rico.
Thank you.
So would you all join me in welcoming Giovanni Mendez? So apparently we're going to sit over here. Okay, thank you, Giovanni, for joining us tonight. I'm so excited to have you because you're actually my attorney too and helped me with my Act 60, formerly known as Act 22. So I have some questions for you that I've prepared.
Thank you for the invite.
Of course. Don't say that.
Oh, there you go.
Okay, perfect. So I wanted to ask you a little bit about your background before we get into tax stuff. So were you born in Puerto Rico, and what part of the island are you from?
Yes, well, I was born in New York, actually, but I've lived in Puerto Rico my entire life. I moved here as a kid, traditional Puerto Rican circulation between the States and here.
Right, right.
But lived here all my life, in the west coast of the island, actually. And
which
then
city?
Aguada, which is the town right by Rincon.
Okay.
So Rincon is the point of reference now,
Yeah.
right? But because of real estate and a lot of people wanting to live there.
Yes,
so
it's beautiful.
Town, what is a larger town just by it.
Right. Did you go to school? Is all of your education here in Puerto Rico?
Yes, undergrad for accounting in the West Coast in Mayagüez, which is the largest city in that area as well.
So we're like, everyone went to school.
Colegio. Yeah.
What made you want to get into the law as a practice?
Oh, I don't know. Someone asked me when I was 6 what I wanted to be when I grew up. I said I wanted to be a lawyer. And that,
So the commitments we make when we're 6, we're forced to do.
Yeah, that happened.
All right. Well, I know that a lot of people are probably aware of Act 20, 22, what's now known as Act 60. I'd like to kind of hold off on talking about that till the end because there's so many other tax incentives that people don't know anything about. So let me look on my list. So it's also important to me to point out, and you can kind of try to tell us this as we go through some of these. There's misconceptions sometimes about these things being only available to foreign investors and people from the States who come here and get like the Act 22, Act 60, but I think a lot of these programs are actually available for native Puerto Ricans and people who are living here now.
Yeah, well, actually, all of them are, except the only one that has a residency restriction is the Investor Act, which was formerly Act 22. And actually, that restriction is very particular. You couldn't be a resident between 2007 and 2012. So even what we refer to as the Puerto Rican diaspora that left just around 2007 and before that, when the Puerto Rican recession started, those persons that left could return and be qualified for the individual investor decree.
Okay.
Every other tax incentive has no residency restriction at all. It's more based on the incentivized industry, like real estate or agriculture or exportation of services, and that has a reason to be. But every other incentive would qualify for local business, and I use an example constantly for, there's a popular sandwich business. They do food trucks, and they have a manufacturing incentives act for their bread. So they manufacture their bread in an affiliate company, and it sells it to the sandwich company, and that's part of their tax planning, and it's all local, right? So it's a simple, and the same token, like people or businesses that manufacture ice cream or something like that,
right,
and sell locally. Those all qualify for incentives, so there's no residency restriction in in pretty much all of them, except for what was Act 22.
Okay, so it's really the exception and not the rule. And by the way, make sure you're holding your mic close enough when we're talking. I want to make sure everyone gets to hear. Are you hearing okay?
Yes. You can turn the volume up for a lot of people talking in the background, though.
Okay, I don't know if you want to come a little closer or just yell at those people. Hey, you in the back, keep it down.
Can we go in the back?
Yeah. You might be on camera. Giovanni, I'd like to talk a little bit about the Young Entrepreneurs Act. Can you explain what that is?
Yep, the Young Entrepreneurs Act has two components to it. One is the simplest one because you don't have to apply. All you need to do is be under 26 and get hired.
Oh.
And that component is that the income up to $40,000 in salaries is excluded from the income tax calculation. So that portion is, since it's considered exempt income, is naturally tax-free. So your tax brackets start at $40,001, right?
Okay.
So then, first 16K are in the zero tax bracket, and then 7% and whatnot.
Okay.
And again, that's for persons under 26, which is a good incentive for young people living here, and obviously to recruit young people that are right out of college or whatnot.
They have to have a business in order to do
No.
that.
That's any person under 26 that is required, that is recruited and is paid under a W-2. So
Okay,
that's
so
literally
that's employees.
Yeah, that's for employees.
Okay.
So that's why it's the simpler version, because you don't have to apply for that.
Okay.
You have to be young.
Cool.
The other version, or the other component, is for persons under 35, and that you need to apply for.
Okay.
And that originally would exclude $500,000 in income every year for the first 3 years.
500 every year.
It used to be 500 every year.
Oh.
It
okay.
was modified now, and it's 500,000 total
Okay.
over the span of 3 years.
Okay.
And to apply for that, you need to be under 35 as well, and it needs to be a new business. And unfortunately, you get just one shot at doing that, right? You apply for it once. If that business fails, you can't do it again.
Okay.
That being said, there's right ways to plan for having, one singular business that, can try multiple ventures, right? So,
Okay. I like that. So if someone they have to be under 35? I mean, can they be 35, actually 35?
they can be, yes, 35 or under.
Okay. So if they're 35 and 6 months and they start the business and they go through the process, what happens if they turn 36? I mean, they're going to turn 36, but what happens to their...
Well, hopefully.
We celebrate.
What happens to their
You just need
tax
to be in the program at that time,
Okay.
and you get the 3 years.
Okay, so you could essentially start it at age 35 and still be sheltering income at age 37.
Correct.
How new does it have to be?
How new?
The company.
It needs, at the time of application, it needs to be a new business.
From like zero.
Zero, yes. A new venture. If you have another business, then you can have another business doing more than 500K and start a new one that does something else, right? Or spin-off or
Does it
whatnot.
have to be a corporation or could it be an LLC?
It can be an LLC because that benefit is really granted to you as an individual. So it can be a DBA, sole proprietorship. It can be you operating, that business.
That's great.
Is there a residency requirement for that?
Well, there's no exclusion from having not been a resident in Puerto Rico. But for this to work, it needs to be Puerto Rico sourced income, and you need to be a Puerto Rico taxpayer. So you do need to live here, right? Because if not, you're paying taxes outside in the U.S.
Let me ask you a little bit about one of the acts that I find really interesting personally, especially for investors, is Act 74.
Yep, that's Act 74 was also included in Act 60 now,
Okay.
but it is the Tourism Incentives Act, and that again has no residency restrictions. And since it's a business incentive, you can plan with having investors that are outside of Puerto Rico.
Great.
Main benefits are the 4% tax credit on the income for the tourism activity. Normally it's hotels, but you could do yacht charters. You could do pretty much submit anything that is targeted at the tourism market.
Would Airbnb apply for that?
No, not Airbnb, because for
Short-term rentals?
you need to have 7 units as minimum to qualify as an
I've got 10.
parador in a unit.
Same?
Yeah, the same project needs to have what used to be paradores,
Yeah, yeah, yeah.
and you could do that like the Airbnb model, which is the traditional bed and breakfast
Right,
model,
yeah, yeah.
can qualify. But there's a requirement of 7 rooms, 7 bathrooms to start. But yes, it could qualify. And then you get 4% tax and tax credits, which is what a lot of people love for the projects, because you can get, with the new version of the law, up to 40% tax credit, which could include acquisition cost if it's let's say it was a big home, a mansion, whatever, and now you turn it into a hospitality project. Well, the tax credit could include the acquisition cost and the investment cost to turn it into whatever you're doing, and you get up to 40% tax credits. And those tax credits, you can sell them. There's a secondary market that's very liquid. So you invest $1 million, you get 400,000 back in tax credits. You sell them, average 90 cents on the dollar, sometimes more, sometimes less. But it's a very liquid market. So that's
Wow.
yeah.
So now, if you bought a property that was, I don't know, $1 million, and then you had to do some repairs to it, and you have to advertise, and you have to get it up and running, like how many things can be used for that 40% tax credit?
Normally it's the improvement, so anything done, to improve the property. But if it's first use as a tourism project, again, so if it wasn't a hotel and you're turning it into a hotel, pretty much,
Okay,
then the acquisition cost can be part of the tax credit calculation.
okay. And what if it was a hotel, I don't know, 10 years ago, and it's been abandoned and hurricaned?
It's new purpose, yeah,
Okay.
yeah, yes.
Okay,
Hey Gio, so I have a 5-unit building, and I have enough land next to it to build more. So if I were to build more and convert it into hospitality, then I could deduct 40% of the total acquisition, or just the additional development?
It's important that it's not a deduction, it's a credit.
Credit.
So
better.
credits, most times are better because you can sell it, you can transfer it. The transfer generates taxable income, and that's why, that's the downfall, right? So you sell $1 million in credit, you have $1 million in income, and you pay tax on that. So it maybe eats into like the amount of credit you got. But yes, absolutely, you can do that under the Tourism Act. You could also do it under the Opportunity Zone Act. So you need to see which one fits better what you're trying to do.
Thank you.
Can you only use one?
You can only use one because the Opportunity Zone law says that if the project qualifies for another incentive, you can't get OZ. So you need to see, so if it's a hotel project, then yes, it qualifies. But let's say you don't have the 7 units, you have 5, then you go the OZ route. Or for some reason you have more units, but they're not all in suite, or for some reason it doesn't qualify as a hotel technically. Then you go the OZ route, and you get different incentives there.
Okay. I want to ask you about long-term rental income. Someone told me about Tax Act 132, 2010. So, are you familiar with this one?
I am.
Okay, can you tell me how that works?
Well, I can tell you how it worked.
Okay. You-
It's not, the provision ceased in December 31st, 2020. So if you had long-term rental income for a primary home, it was the primary home of the person.
Okay. So
So
it was like your house, you lived in it, you moved away, now you're renting it? Or,
the occupant is using it as their primary home.
oh, okay, got it.
Yeah. Then that income will be tax-free,
Okay,
but it's not around anymore.
okay. I thought it got extended, but I guess not.
Extended to 2025. Yeah, I heard it did too. That's what I heard from my accountant.
Maybe it did.
Same.
Okay,
Yeah, I thought it was extended to 2025 along with when they did Act 60 is what it was within Act 60 is what I was told.
And as far as I know, Act 40 after that removed it when they limited the tax credit for film. And so basically, when they increased the Act 22 to 5,000 and the film, and they also messed with the historic properties and did away with that. But I could be wrong.
There's always something to learn.
I could be wrong.
Thank you.
something to research.
Excuse me, can you go back to 164, the 74, the act.
Act 74? Yes, you had a
Yeah,
question.
Before we go for another act.
Okay.
I own a piece of property. It's a farmland that can build 400 cabins. So when you say tax credit, I'm in the process of developing right now. When do I claim the credits? When I sell, or really I don't have an income yet because the cabin hasn't been built yet, but it's only a development. How can I tap into?
But have you applied for?
74?
Yes.
No, that's what I'm here to learn more about.
Yeah, so the calculation starts as a, they have an initial meeting with the tourism board. So any expense before that, you've lost.
Okay,
It needs to be as of that initial meeting as part of your application process.
got it.
And then you generate the credits in two ways. The higher credit you generate, you start being paid that credit after, a period is established after you have the first paying guest. The first paying guest. And then it's breaking off in pieces, and you get that periodically every year, right? That's how you get the higher amount, which is the 40%. The 30% you get as soon as you secure financing for the project. So you start getting paid that earlier. So it's a little less, but that's most people go with the 30% because it's faster, time value of money.
So the credit is based on the income, the revenue?
No, based on the expense, but starts getting paid big when you have paying guests in the higher amount of credit.
So the government pay me, not like using that as a...
The government will issue you a credit, and you can use it yourself, or you can sell that. And they're very valuable because, first of all, it applies to non-exempt income. So, you reduce your tax bill by just a little. But the second thing is, and we can, without complicating it too much, let's say somebody's late on paying their tax because they filed an extension but didn't pay the tax, and they accrued penalties and interest and whatnot. If they then purchase a credit from you, that goes away. So they didn't only save the 10% or 7% or 12%, whatever, it depends on what you negotiated. They also save that penalty. So the value moves up and down depending on how early you sell it in the year, how late. If you wait till October, right, you might get a little more for it.
So I should apply from PRICO?
You need to, the application process is done, through the SBP as well and DDEC, but also you need to go to the tourism board.
Okay.
How easy are those credits to sell on the secondary market?
No, it's very liquid.
And they, what are they worth? Like what?
No, I'm using as a point of reference 90 cents on the dollar.
Wow.
I've seen some recent transactions that are 93 cents on the dollar.
Wow.
There's brokers and there's, so, a cut, so
Right.
you average it at 90.
Yes, Felix.
Is there a minimum of investment to apply for Act 60? Like how much you need to invest into a property, or is there no?
Wait, Act 60, like the Act,
No.
With Act 60.
Well, it's Act 60. No, there's, there's no minimum investment. The cost will, the cost and the market will determine that there is a minimum, but legally, no.
Tony.
Is there a, you have to be Act 60, could somebody that's new to the island but they're not going with Act 60, could that?
So it's now all Act 60. That's why we're talking about Act 60. So Act 74, Act 84, Act 87. The film credits are Act 60. Everything is now Act 60. So not Act 60 as an individual investor, but it's different chapters now.
I know, I think I've made it more confusing, having, everything's just under Act 60 now. I wanted to also ask you about historic properties, and I guess if they exist, it's under Act 60, but what are there incentives for?
Yeah, it's similar. You would no tax on the rental income for the historic properties, and
Forever, or?
Yeah.
Forever.
Yep. And there's also reductions at the municipal tax level, at the property tax level.
what counts as historic?
Well, there's a map.
Oh, okay. I
Yeah,
imagine
but
most of Old
Old
San
San
Juan.
Juan,
Yeah,
yes.
okay.
Old San Juan and yeah, no, around the island there's other property and even Quebradillas, Camuy has, you know, but there's a map there designated.
Okay. So somewhere I had written down tax credit 140 of October 4th, 2001 for buying low or rehabbing low income housing.
Yeah, those are tax credit programs that no longer exist. Same for the urban redevelopment zones. That Act 40 that I mentioned, that killed a lot of these programs,
Okay.
killed that one. as well.
Did that also apply then for, I wrote down revitalization programs such as Santurce?
Yeah, that's to 12.
Okay,
Yeah,
so is that gone now?
That's currently gone, but technically, opportunity zones kick in all those areas.
Correct.
And opportunity zones generate 25% tax credits.
Okay, so since it's come up a couple times, let's talk a bit about opportunity zones. What do you mean 25% tax credit? I thought it was like, don't you just defer the capital gains and?
That's the federal law is you defer the capital gain, you gotta step up in basis, and when you exit the asset, you pay after 10 years, you pay no tax. That's the federal program. 36 states and Puerto Rico have adopted conformity to that for state tax purposes, but then Puerto Rico added a kicker, right, which is what they call priority projects, priority opportunity zone projects. And that adds 25% tax credit, or up to 25% tax credit, acquisition and investment, exemption from construction taxes, property tax, whatnot. And what's very interesting in the Puerto Rico program is you buy the target asset. In the US, if you sell it before the 10 years, you get a flow-through cap gain for your partners. But in Puerto Rico, if you take those proceeds and roll them over into another investment, you don't pay the tax, right? So you don't pay any, there's no flow-through cap gain tax. And you could continue to do that for the 10-year period. So
So you don't have to be committed to the full 10 years.
in the US, you're pretty much committed to 10 years on the asset. Here, you're committed to the fund, not the asset.
Wow, that's beautiful.
And you can flip properties inside of the fund.
I'm sorry?
You can flip properties inside of the fund.
Yes.
I buy something tomorrow, I sell it on Tuesday. As long as I reinvest it.
You reinvest it, correct.
And when does the clock start ticking on that investment? Like, do you have to apply for it before you purchase the property? Is it automatic for the property? Like, how does that one work?
You can contribute the property to the fund for the investment. But the clock starts ticking since the creation of the fund, same thing. If you had something that was designed as an OC fund, the regulation allows you, in specific cases, to go back to the original approval of Act 21, which was the original OZ Act here. So you can.
So if we've had a fund going all this time,
You
we
can
can
go
still
back.
qualify for it?
Let's say there's a possibility, right? And let's say yes, and we haven't talked, but yeah.
All right, any other questions about Opportunity Zone while we're on it?
Let's say the land that I have is a farmland that can build 400 cabins. So I want to create as a fund to hold that property. My question is, with an X60, people's coming, they have to buy a property within 2 years. Now, we are not selling individual cabins. Can they buy the property into the fund?
No, it needs to be registered in their name because it's primary property, primary home.
Question, where I can see like a map of zones.
Of Opportunity Zones?
Yeah, I mean,
The question is, where can I find a map of Opportunity Zones?
There's centers as well. So I heard like about the opportunity zone centers, like Condado is a part of centers. So, but definitely does not apply, right?
to Condado? Yes. It's, property in Condado. So in Puerto Rico, particularly, the calculation is something like 98.5% of the island is an opportunity zone. So
Wouldn't it be easier to figure out what areas don't qualify?
Roosevelt Roads,
Help or anything?
No, I'm good.
the heart of
Okay.
Condado, like where the Vanderbilt and that triangle, Vanderbilt, La Concha, that wouldn't qualify. But towards the edges, yes. So same thing.
Gallery Plaza, does it qualify?
I don't know exactly, but I would say I don't know Gallery Plaza, but Loiza Street, yes. So, you know, Roosevelt Roads. So that takes a big chunk of the island outside, and then anything that's a golf course because that's a prohibited activity. So
Golf course is a prohibited activity
yes,
for opportunity zone?
yes.
You know why?
Those are the sinful.
Okay,
you know,
golfing-
all the
golfing is
sinful.
sinful.
Yeah. So like massage parlors, tobacco, golf. That's all. No.
Dispensaries.
Yeah, no. Anything that doesn't. That's not federally a legal activity. So you can't incentivize something that's not federally a legal activity.
Right, I understand.
Yeah, and then Cocoa Beach was rezoned, so that there was a little lobbying done there, so that technically qualifies as an opportunity zone. So with the rezoning of Cocoa Beach, that 98.5, maybe 99.
Wow.
But
So
yeah,
Roosevelt Roads is an exception, right? It
no,
is-
Roosevelt Roads is not part of the, and allegedly, it's because nobody lives there, so it's not part of a census tract. So at one point, there was going to be some lobbying to change that because that happened not only in Puerto Rico, but in many other places in the States where you had places that were abandoned
Right.
and, and didn't qualify because they didn't have a census tract.
Interesting. I want to talk a little bit about the farming. There's an act for farming, and I haven't looked into that very much myself, but can you talk a little bit about that?
Yeah, that's the Act 225. You have to be a bona fide farmer. So you get registered as a bona fide farmer with the Department of Agriculture. And there's same thing, there's not necessarily any minimum acreage of farmland that you need to own. But then you get exemptions, 95% of your income is just exempt, and that's where your bracket starts. So you end up not paying tax on anything that's farm income. There is some additional incentives on that you get. There's federal funding, obviously. You qualify for all the federal funding for your products and farm product, whatnot, equipment, and
Wasn't there
you
some
don't
way
pay
to,
any excise tax on equipment that you ship in. You can
like
import.
the big tax that you pay on a car? when you
Yeah,
ship a
so
car?
you bring in a truck, one truck every certain amount of time, and you pay no excise tax on that.
Does it
while
have to be a
it's owned
certain
and
size
used.
truck? Like it has
No,
to
it's a vehicle, right? There's no specification. Normally it's a truck, right? Because it needs to be used for the farm, though, right?
Right.
Like not going to bring a sports car.
Right.
Common example of that is, let's say, we haven't talked about, but the Private Equity Fund Act, which is Act 185, you can create a private equity fund which gives your investors a 40% exemption,
What?
a 40% deduction on their investment. So invest 100K with you, get 40% deduction on their own tax if they apply that against their other taxable income. And then the fund, the 185 fund, then goes and invests in hotels, in farmland, so
And then
you
you could take advantage of like.
yeah,
that
so it's
second
stackable that way. The only one that has a strict,
It's amazing.
there's a few that have strict prohibitions, like opportunity zones. You can't, if it qualifies for another thing, you can't be an OZ. Or 135, which is young entrepreneurs, you can't stack a 135 with an Act 20.
Okay.
Any real estate or just hotels? Is there any restriction on the type of real estate
For
this type of investments?
no, I'm just giving examples.
Just any real estate.
Yeah, no. I mean, if it's tourism, it needs to be tourism oriented, right? You can do an amusement park.
But for this Act 185, so
Oh no, well, Act 185 has some diversification requirements, but they've been eased. But it could be anything. 60% of the investment needs to be within Puerto Rico, and that's part of the diversification. But it could be in business. There's 185 funds that do bridge funding. Yeah, anything. It's a private equity fund. Anything you want to do, there are capitalization requirements, so you need to raise a certain amount of funds. Yeah.
Oh my God, it's really coming down. We're almost done here. Are there any other ones that you are familiar with that we haven't brought up that might be of interest to the people here?
I don't think REITs are used enough in Puerto Rico. There is a local REIT law.
Okay.
So basically, there's several requirements too, but if you're doing like full real estate investment, for example, and for rental property in the REIT is disregarded, pays no tax if you distribute at least 90% of your earnings, and then your limited partners are subject to a 10% withholding tax. So it's a significant reduction from the ordinary 33%. So they're not really used a lot, but that's again no residency restrictions. Anyone could qualify. You build a REIT, and you diversify 20 investors or more, and it's a pretty good vehicle.
That's amazing. Are there? So is that like an IRS exemption then? You can.
No, locally. That's locally in Puerto Rico.
Okay. Okay. Do you know the source where we can find out? Like, is there a place where we can look up? Like Act 74 is an Act 74. It's under Act 60. But is there an easy way to like look up this information?
I would say the DDEC has some resources. InvestPR also has general resources in their webpage, so you might check out what they're doing. They're still in their building process, so they continue to add more and more content. So I would check out InvestPR, and there's the qualified promoter programs that they market these incentives as well. So I like one called Casper. So Join Casper is one. They have a lot of resources there, newsletters, and PR Business Link is another one that's pretty good. And GEO.
Of course. Of course. I would like to open it up to questions for the people who are trying to stay dry. Does anyone have any questions for Giovanni?
For the OZ, can I bring the Houston money, like the properties I sell in Houston, and put it into the Puerto Rican?
Yep. Yeah. You can. You can bring federal OZ money. Yes, absolutely.
Bitcoin as well.
Yeah. Gains on crypto. Yes.
You would have to originate the OZ fund in Puerto Rico to take advantage of investing in Puerto Rico, or can you have a U.S. fund that invests in both areas?
You can, but remember, Puerto Rico has the Puerto Rico OZ incentive is a decree application. It's not a self-certification like in the U.S. So you do need to register and authorize to do business here.
And there is a residency requirement to that?
No.
Nobody was required. Okay.
And I mean, maybe it's more complicated, but it doesn't, because on the OZ you pay 18.5% tax on the operating income. The guilty tax penalty doesn't kick in. So that doesn't sound maybe great for a local investor, but for an investor outside Puerto Rico, it does, because then you get a deferral opportunity, so you can compound that investment.
And when you get an OZ decree, can you apply that to multiple people? Like, let's say you have 5 investors, would they all?
Yeah, because it's a fund. Yeah.
And is there a minimum they have to invest?
No.
So they can invest $1 in theory, and you can invest the 99%.
Yeah.
Okay. Yeah.
I thought of one more question that I personally have. If you have capital gains that come from stocks or crypto with Act 60, formerly Act 22, you don't have to pay tax on those capital gains. But what about if, like Fabian was mentioning, you're selling a property in Houston and you're an Act?
No, that pays tax where it sits. So if it's a U.S. property, you'll pay U.S. tax.
Okay, and that's because you're taxed on the location of the
For real
physical
estate.
property for real estate.
Yeah.
Okay, got it. Do we have any other questions?
If you have a the youth credit, if you have an owner that's under 35 but another owner that's over 35 from the same company, does that work or it doesn't work?
No, because it's the decree is awarded to that to the individual, right? So that's why you can do it under a company, but it's really awarded to that individual.
So it's awarded to the individual, but even for the, okay.
You do a holding company probably for the young owner.
I get it.
All right, we're gonna wrap it up. Anyone else have any questions for Giovanni?
One question about the stackability. So you said the private equity one, the 185 was stackable, but let's say you got the young entrepreneur credit, could you still apply for 22? Or you choose one or the other?
You need to pick one in that case. Yeah.
All right.
What happens after the 3 years with the...
Fully taxable, but you could apply to another incentive act. Yeah.
That's great. All right. Well, I think we're about done with Giovanni. So thank you
Okay.
very much. Everybody give Giovanni a hand.
Thank you.